Now, if we take a look at oil, look at long positions, okay? One thing you'll notice is that when you look at the short positions, you can see that they're cooled off. And they've been cooled off for quite some time now, right? Back in June, they were bearish, okay, because they were aggressive with their short positions, and price had dropped into an institutional buying zone. How's it going, fellow traders? It's Magic Trader here. It is September 19, 2023. Here is a brief snapshot of the positions held by the institutions as of September 12th. And so let's begin, as we always do, by examining gold. And what do we see here? We see that the main focus for gold has been on shorts recently. And as I had pointed out several weeks ago, this was going to be the case because of the banks requiring the offloading of their long positions, which was going to fuel a move to the downside. And I told you that because there's a correlation, positive correlation between gold and the euro, that this drop in the euro was going to cause gold to drop as well. So if you look at the coloration of the cells here that we have under the long percentage and short percentage, you could see that the coloration has slightly turned red, meaning bearish, and we contacted an area of supply here. So the area of supply was contacted, they started to become more bearish, and price has since declined. So what is in the works for the future? Well, what I can tell you is that there's going to be some bearish pressure, okay? And that is what has been taking place. How long is this bearish pressure going to hold for? That is the question. We can't say for certain where price is going to be dropping to because of the condition of the charts, the lack of trends, and so forth, as I've been pointing out. But it's important to remember that once they're done the process of unloading their long positions, then we'll be able to see what their next game plan is. Until we see exactly what the banks are doing, we can't speculate on what is going to happen over a medium or longer term. All right, so that's what we have with gold. Now, what I can see is that retail traders are mostly short right now. Okay, they're about 79% of their positions geared to the short side. So recently we had a move up in price on the euro. And that is because retail traders were starting to exit their long positions and started to get into short, but it looks like they've been more short on gold this whole time. So, well, they started adding to it over the last week or so. So retail traders are mostly short. We'll take a look at the euro a little bit later, but that's all we need to be saying for the time being for gold. So just keep in mind the current situation and why price is moving the way it is. It's not that they're accumulating a massive short in preparation for a drop. I think the accumulation of shorts was just to help facilitate a move lower as the euro was dropping as well. Now, if we take a look at oil, look at long positions, okay? One thing you'll notice is that when you look at the short positions, you can see that they're cooled off. And they've been cooled off for quite some time now, right? Back in June, they were bearish, okay, because they were aggressive with their short positions, and price had dropped into an institutional buying zone, all right? So after the buying zone came into play, price started increasing, and you can see them increasing their long positions here. So much so they went from 350 all the way up to 428, and now it's starting to become aggressive. Their long positions are starting to become aggressive, all right? So let's take a look at the chart. Here we have it. So we have price coming into this area of supply on the weekly chart. I made mention of this, and I said, nobody should be going in long when a supply zone is in play. That's always a bad idea. We want to wait for that zone to be removed first. We don't want to speculate that there's going to be a drop in price because supply is in play. And if a supply zone is in play, you have to respect it. And so that's why we wait for its removal if we are considering getting into a long position. Now, I spoke with members about this in quite some detail and told them about what we should be looking for on the daily chart for an entry long if you want to take a short-term trade to the long side. And so that's what we're currently watching for, because according to the monthly chart, there is room for price to rally up here. Now, is it going to get all the way up there? We don't know. We have to wait for supply to be removed, as I mentioned, and the proper formation on the daily chart to take place. All right, now let's go over to the US dollar. What do we see with the US dollar? Price is rallying up on the US dollar, but if you look at short positions, they're getting aggressive. Okay, it's quite an anomaly here. Price is rallying up, and the banks are increasing their short exposure. Yes, they've also increased their longs, I should say. If you take a look at longs, you can see they went from very cooled off territory, 17,000, up to 25,000 now. But the more aggressive position is the shorts, okay? And take a look at the coloration of the cells here. Went from bullish to now a tinge of red, okay? Bearishness as price is rallying. So it's quite interesting that they're doing it like this. We're going to have to look at the other charts to see what they're doing to kind of gauge what is possibly taking place here with the banks increasing their short positions. So first, let's start by taking a look at the Aussie. Now, the Aussie, for some time, they've been playing this game with short positions for a very long time. They've added shorts, offloaded shorts, and they've done this routine over and over again. And you can see every time they were aggressive with shorts, eventually they had to take profits on it, which fueled a move to the upside. Now they're getting aggressive with shorts again. And we just reached a maximum size, 137,000. That was last week. So what do? They started taking profits on it. And what do you see on the chart here? With the profit taking, slight move to the upside, right? So we also have a demand area in play. Is price going to rally aggressively? We don't know that at this point because they're not accumulating longs. And for us to be sure that price is going to rally up, we'd want them to be increasing their long exposure quite dramatically. But as for now, that hasn't been taking place. Retail traders are about 61% long right now. And so we'll have to see how things unfold. Watch to see what they do with their shorts. Watch to see what they do with their long positions. For the time being, I'm staying out of Aussie because of the condition of the markets right now. USCAD, what do we have? Take a look. Aggressive with long positions here. 81,000. They went from cooled off territory in August, 30,000, all the way to aggressive territory now, September 12th, of 82,000. Okay? As you can see, big rally in price, right? Slight bullish sentiment here, but I wouldn't be holding my breath for this to continue because of the condition of the markets, like I said. The dollar, they're increasing shorts. Here, they're increasing longs. Quite an anomaly. So I'm staying out of this market until something is a little bit more clear. What we see when we look at retail traders, they're about 66% long right now. 66% long. And then we had the drop in price. Okay? So they're adding longs at the highs, and now price is reversing to the downside, just as the euro is rallying. Okay? For the same reasons as well. US Swiss, we have price rallying up into that area of supply and remaining strong. Remaining strong. Look at that. Very strong candle up inside the weekly area of supply. We do have some demand that came into play here, so we could see over time a bigger move to the upside like this. All right. But this one's tricky. We need supply to be removed first, and then price could easily rally up to the 91s. Then if that was to be removed, then we could see a move even higher. Okay. Retail traders, what are they up to? They're massively short as price is rallying. Not good. 76% short as price is rallying. Now the euro. So if we take a look at the euro, we can see that recently they brought them up, their long positions up to 235,000, and then they just started taking profits on those long positions. Okay. So them closing off their longs, they offer those longs somewhere. They offer them to retail traders. That's what took place. They offered them to retail traders. So what's taking place right now? Well, price has contacted a buying area here. Okay. But remember, they're in the process of offloading long positions. So unless they were in a cycle of accumulating a long position, I wouldn't be very excited about this demand zone coming into play, because at the end of the day, there's a distribution cycle taking place. Okay, they're distributing their long positions. So I'm not interested in trading euro at this point, because if the banks are not accumulating a position aggressively, then I don't want to accumulate a position aggressively. It's as simple as that. We just got to be patient. Okay. What we do know is that a major area of supply was created up here in the 111s. And ever since then, there's been a downward pressure taking place on price. Okay. Fueled by them taking profits on long positions, and recently the addition of some short positions here. Cooled off territory of 72,000 all the way up to 99,000 at this point. All right, so if we take a look at current positions of retail traders, they're about 70% long. This is from 80% just last week. So they're offloading long positions, getting in short, because they're assuming that price is just going to start heading lower like that. So that gives me the bias of a short-term move to the upside, which is taking place now. And how far up it's going to go, we don't know. But short-term bias is to the upside. If the retail traders start to get to a point where they're aggressively short, then I would suspect that price is going to reverse. And then we'll see another push down towards this area of demand and eventually break it. Without this demand breaking, there can be no drop down in price like that. Okay. So that is what I'm watching for at this time. Pound, big move. This move to the downside, a lot stronger than what we're seeing with the euro. Look at this move. Quite aggressive all the way from our supply area. Okay. And remember our target that we had to the upside. This was our upside target because we suspected this would be the area where the banks would likely take profits on their long positions. So we wouldn't want to be holding long positions if the banks are going to be taking profit on those long positions. And lo and behold, look what happened. Highs of 135,000 all the way down to 83,000 within just what, 3 weeks? 3 weeks of profit taking. So that's exactly what took place. Once again, we were able to know exactly where the area was that the banks were going to take profits, because we've been following the storyline of what's been taking place with the positions and what the banks are doing with price, and by locating their institutional buying and selling zones. All right, retail traders are mostly long at this point. 78% of their positions are long. They keep adding long as price keeps continuing to drop. So be very careful with that. You shouldn't be adding long at this point. The bias is to the downside simply because of what's happening with the euro. Okay, US dollar, Japanese yen. We have an aggressive move to the upside here taking place right inside supply. As long as supply is holding, we should respect it. Although we are seeing signs that likely price will continue heading higher. Okay, when we take a look at the supply and demand and the candle formations, we can determine that significant buying is coming into place. Okay, and we've been talking about this for the last few weeks. And then when the data comes out, we can confirm that yes, indeed, they are buying. The candle formations tell the story, and then later on we look at the CFTC data, and it usually confirms exactly what we are seeing on the charts. Okay, so I wouldn't be a buyer now as long as supply is in play. Supply gets removed, then it will open up the charts for a move higher. Okay, it's as simple as that. Right now, retail traders mostly short, 67%. They keep on shorting as price is going up. And that's how it is with the US dollar Japanese yen. Last but not least, let's look at the Kiwi. And the Kiwi is going to perform similarly to the Aussie. It's been dropping and it's holding now. We see that they increased their shorts, and that's what caused price to drop. Longs are not aggressive. They're completely cooled off. We have a few sells here, bearishness, but that's not sustainable. When we look overall what they've been doing since March, pretty much all year, there's been nothing sustainable here. So that's a clear signal to stay out of the market. All right, ladies and gents, that's it. Hope you enjoyed it. If you want to learn more about how we do this analysis that you will not find anywhere else, come and join us, www.whiteoakfx.com. We would love to have you. And until next time, take care of yourself, and we will see you later. Take care.